This is Work Together 5-3, textbook page 133 and workbook 97. Just looking back over this chapter, it's dealing with dishonored check for one. This is when we send a check that somebody's given us through the bank and the bank refuses to pay because maybe those people don't have funds in their account to cover it. So that's called a dishonored check. Another item that comes up is electronic funds transfer and EFT, and that would be such as I have a couple people that I sponsor in a missions field. One's my cousin and the other one is a real dear friend. And that amount I have set up so it automatically comes out of my checking account. When it automatically comes out like that, it's called an EFT, electronic funds transfer. It doesn't ask me every month if it's okay to take it out, it just does it. Another terminology that you'll have is the debit card, and most of you have a debit card if you have a checking account. And that's where you can go to the store and you go through the checkout line and you swipe your debit card and you put in your PIN number and it automatically then takes it out of your checking account without you having to write a check. It's very convenient. It's nice. You can also swipe and ask for your balance, like if you go into an ATM machine and find out how much you have at any one time. Those are the three terms that they're introducing this particular time. So, Work Together 5-5, it is telling us, step 1, to enter the following transactions on page 6 of the journal. So up here in the right hand corner I'm going to paginate it, page 6. Notice it's a partial journal. There must have been transactions already started and they put a gap in there, and we're just continuing on line 3 it looks like. Transaction 15, so I'm just going to put 15 in for the 15th. And it says, just a second here, received notice from the bank of a dishonored check from Christopher Icola, something like that. $63 plus $10 fee. A total of $73. And this is a case where the bank is going to charge when somebody bounces a check, and it's going to charge that business. And I know you've gone into stores where it says, you know, return checks, they're going to charge the actual person who wrote it $25. Well, the bank is charging, in this case, the person who deposited it, us, $10. So we're going to transfer that back, that cost that we incurred, back to that business, and to do that we're going to add it to their total of how much they owe us. They originally owed us $63, but now they're going to owe us $73 because they're going to owe us that $10 fee for that bounced check. So I'm going to, and when they paid me, I had taken their name off the books thinking they actually paid me, but they didn't. So I got to put their name back on the books with this new amount that they owe me. So I'm going to put in the account title column, because there's no special amount column for it, accounts receivable, and I'm going to abbreviate because this is pretty big, and Christopher I-K-O-L-A. So I'm going to debit $73 in general debit. And I originally, when they paid me, I had debited cash because I got that money. Well, I really didn't because the check bounced. So I got to take that money back out. And I'm going to take out $73 because not only did it take out the original $63, but another $10 fee. So it took out $73 from my account when it bounced. So they're going to owe me that $73, those little buggers. And the documentation to this is memorandum number 121. So we wrote a note and put it in our files. On the 16th, So, date your journal, 16. Paid cash, I know cash is credited. Paid cash on account to Spinoza Enterprises, $135 using an EFT, meaning electronic funds transfer. So, I paid somebody off. So cash was decreased to $135. And accounts payable is decreased because I'm paying somebody off. Now, there isn't a special amount column for that, so I have to use account title column. Accounts payable. Who was it again? Spinoza Enterprises. I'm just going to abbreviate that. Memorandum number 122, I think. Correct. And I'm going to debit the account, because to debit an account's payable, because it's a liability, would be to decrease. And I'm decreasing how much I owe them. And I did it electronically without having to write a check. So that's why we're using a memorandum, because there wasn't a check written. On the 17th, I purchased supplies using a debit card. So supplies, because there isn't a special amount column for supplies, I'm going to use a general debit and credit column. Supplies is written in the account title column. And I purchased them, so I gained them. So that's a debit to supply, $31. And it was a debit card. So it immediately came out of my checking account, so I'm going to credit cash, $31. And this is written up in a memorandum. I'm putting in our records, Memorandum 123. That completes Work Together 5-3, and you're ready to work on your own 5-3. Have fun.